Live from the NYMEX, this is Futures Now. I'm Courtney Reagan in for Jackie DeAngelis. The traders that are joining me today, Brian Sutland and Jeff Kilberg, they are both from the CME, but let's get right to the big story of the day, and that is China's surprise move to devalue its currency. What does it all mean for us here in the U.S. and the ripple effects that are being felt around the world? Joining us to discuss that and more is Peter Schiff. He is the CEO of Euro Pacific Capital. Peter, thanks so much for joining us today. I guess my first question really is, why isn't gold moving more on the news out of China?
Well, you know, it's moving up a lot in terms of the Chinese yuan, right? Because they devalued the yuan, and gold is up in terms of the dollar today, so it's up even more in terms of the yuan. But the reason it's not making a bigger dollar move is because China's devaluation is also impacting other currencies, particularly commodity-linked currencies. Look at the Australian dollar, look at the Canadian dollar. Gold is making a huge move in those currencies as well. But, you know, I don't think this is the beginning of future devaluations. You know, this is a small move. Remember, the Chinese yuan has gained tremendously in value along with the dollar against a number of currencies. So the Chinese are reacting to weakness in other currencies. It's not really a dollar story, but I do believe the dollar is in a bubble. And when this bubble bursts, I think you're going to see a substantial revaluation upward of the yuan against the U.S. dollar, ultimately.
So there's still a lot of movement potentially that's left to happen here. And of course, every time something big happens that moves markets, whether it's equities, whether it's commodities, we all wonder, what does it mean for the Fed? So Peter, in your opinion, what does China's latest move really mean for what the Fed will or won't do and when?
I don't think it matters at all. Again, I've been saying that I think the Fed has been bluffing about its ability to raise interest rates all along. I think the Fed appreciates that this is a gigantic bubble and any significant rate hike would prick it. In fact, even a quarter of a point rate hike might be a big enough pin to prick this bubble, which is why all the Fed does is talk about raising rates and doesn't actually raise them. And in fact, I think if they do raise rates slightly, whether it's in September or December, the next move after that is going to be to move them back down to zero in preparation for QE4, because this economy will be in recession if the Fed raises rates, and it will be in recession even if they don't raise rates.
Wow, that's quite a big prediction. What do you think about the global currency wars? How will that end? What did today's action do to shake up predictions there?
Well, unfortunately, I think America is going to win the currency war, right? Which means Americans are going to lose. It's a race to the bottom. So that's the one war that you don't want to win, because the objective is to kill yourself. But I think we're going to win. But right now, you have a dollar bubble. I mentioned this. You have all these currency speculators that have been fooled by the Fed's monetary magic. They bought into the same head fake that they did in the late 1990s, where they believed the Fed, they had confidence in its monetary policy and the U.S. economy, and so they bid up the dollar. Everybody expects the Fed to be beginning a tightening cycle. They're going to start to shrink their balance sheet. None of this is going to happen. They're getting ready to do QE4. The balance sheet, which is now, what, $4.5 trillion, is going to explode, ultimately closer to $10 trillion. I think the currency speculators are betting the wrong way. And so when they figure it out, I think the bottom is going to drop out of the dollar. And, you know, we're going to win. I think everybody else is going to surrender in the currency wars and let us win.
Big, bold predictions from Peter, as always. Jeff, I believe you have a question. Go ahead and jump on in there.
Yeah, Peter, thanks for being on. And I know your view of QE4 is finally being illuminated. It's been met with some resistance in the past. But, Peter, I think you're onto something with this QE4. The Fed may have to step in. But what is that exact lever that needs to be pulled? Is it a 5–10% drop in the equity market, or is it more central banks overseas getting in to make the Fed roll out QE4?
Well, you know, part of the goal of QE was to inflate the stock market bubble. Ben Bernanke admitted that himself. And so if the air comes out of that bubble because they threaten to prick it, then yes, they're going to have to do QE4 to blow it back up again. If the Fed were to raise rates, we would be in a bear market in stocks. We'd be in a bear market in real estate. We'd have another financial crisis. Unfortunately, that's what the Fed should do. The Fed should have raised rates a long time ago. They should have pricked this bubble. We need that type of bitter-tasting medicine to actually have a real recovery, instead of the phony recovery we have now that is impoverishing people instead of lifting them out of poverty. But the Fed is going to make the same mistake again. They are not going to allow the free market to fix what they broke. They are going to do QE4. They're going to do QE5. They're going to do QEs indefinitely until a currency crisis ends the party, and then they can't do it anymore. And that crisis is going to come.
Peter, before we get to potentially a QE4 or QE5, 5. I want to kind of button up the segment here talking about what China's move means for equities. We're sitting at session lows here today. What does it mean today going into the end of the week for equities?
Well, look, I don't think China's move is what's impacting the U.S. stock market. We had been down, 7 days in a row before yesterday. That was the biggest losing streak in 4 years. I think the Fed is threatening to take away the punch bowl, and people actually believe them. I think they're getting ready to spike it again, but I think the markets is going to be under pressure until the Fed cries uncle, until Janet Yellen comes out and acknowledges that the economy is much weaker than they're pretending, and that they're not going to be raising rates, that they're going to be doing more monetary stimulus. That is what the drug addicts on Wall Street want. They want another fix, and I think the pushers at the Fed are going to provide it, unfortunately.
We'll see if the pushers at the Fed, your words, not mine, are as bold as you are. Peter, thank you so much for joining us. We appreciate it. We'll have you back here real soon. So